Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 17th, 2017. I wanted to cover three things in this video. Well, actually, just two things, the broad market and the VIX. That's it. And in the broad market, I'll look at the Qs, the SPY, maybe the small caps, and that's about it. And then we'll just jump over to the VIX, and I want to highlight something that I actually brought up in the trading room recently, but it may play out here. So it also ties in, as you guys know, the VIX and the market go hand in hand. The market drops, VIX goes up. So the charts pretty much are in alignment. So let's just dive in, and I'll show you what I see here. All right, this is the QQQ Daily. Let's just start with the 60 minutes, work our way out. In the last update, I showed we had this initial thrust down, and I was looking for a bounce back to maybe this line here, back test, and then a rejection. And I also had a comparable line in the SPY that I posted a follow up in the comments section there. In fact, let me pull that post up for you. Okay, here's that last update I did on the 60-minute chart. I believe it was the last update. It was the morning of the 12th, and we were poised to gap up. So what I was looking at, we were poised to gap up to that back test this trend line here. Let me open the chart for you. There we go, so we can see. And I was figuring that might be a place we run into resistance, and we went beyond that. Now, shortly after that, in that same post here, let's get rid of those charts. X that out. The expanded charts. Go down here, and in the comments section, I followed up with a post on the SPY and showed a similar. We had a similar trend line. The SPY had more room to go, and this was, I believe, after the open already, so it showed the gap up and a little more upside, and there was a key resistance level trend line on the SPY. So far, let's just look at where we're at today. The Qs, like I said, overshot that a little bit, but I want to jump on something here and point out something on QQQ. SPY, as you can see, actually failed. So the SPY was much weaker on this bounce up. Again, it was the same old story. The FANG stocks lifted the market and lifted the NDX more than they did the SPY. So the SPY fell short of its comparable uptrend line, whereas the Qs exceeded it by a little bit. But more importantly, let's look at the volume at price histogram bars. I put a lot into those. Let's turn these up so you can see what I'm talking about. Those are the red and green bars to the left of the chart. I have them tuned down a little bit. I like to keep my charts as clutter free as possible, and I can make those out, but I know in the videos sometimes you guys don't have the brightness or the clarity on the monitors. I get some feedback once in a while. You can't see some of the things on the black chart. So there it is. You can see that big bar. And what that really is reflective of, it just shows the where the bulk of the trades occurred. So you can see this sort of consolidation area here where the SPY slogged around sideways, tried to pop its head up once below, above, once below, came back. And, these work great as both support and resistance. In this case, it was resistance. We broke down, we came in and we back tested that resistance area or that trading range from below. And now you can see where these bars pick up right here. We have a big cluster of readings. So what I highlighted both the bars and you can see the price action. So a lot of trades have occurred there. And this is a key support level. So what I'll be watching for, now that if I extend those volume at price histogram bars all the way over, again, I'm looking right here, and let me just grab that highlighting tool again. And that pretty much gives us this area. There's a pretty decent bar there, so to be safe, let's just include that one as well. And so this is what I'm watching for. One of the things, one of many things. The bottom of that level there, to see the SPY take that out, that would be quite bearish because this was a consolidation area that lasted for over a month, a sideways price action, just like we had this smaller consolidation area there, which we've now broke down below, back tested, and have moved lower. So, all other things being equal, I still expect more downside, the same targets that I talked about on the SPY and the Qs on the daily time frames. Now let's look at QQQ real quick and also look at the volume at price histogram bars. All right, you can see here, similar story in the Qs, and these are things you look for. Areas, a confluence of price action, support, resistance. Right there we had some really big volume at price histogram bars. Now we came up into the zone, but we never took it out. We never moved above it. We got well back within it, but we've now fallen back out below it. This is important. So this one, you know, for whatever reason, that was a breakdown, but it proved to be fleeting. We got back up in the channel, but we've broken down again. That's just showing weakness, at least near term. So let's see what happens. The levels aren't as clear down here. We see just a lot of choppy price action in QQQ. So really, to be honest with you, from here, and my 60-minute chart is now too busy. So let's just go out to the daily charts to kind of get an idea where we're going. And this is the same chart. I've talked about this ad nauseum. I cover these, almost continually. I don't think a week or two goes by where I don't do an update on the daily charts of QQQ and SPY. So what we're looking at here is I've been stating for weeks, I still expect at minimum we need to revisit, I think, this downtrend line. I'm sorry, the uptrend line, that orange primary uptrend line, and that 136 is a key support level. You can see it here on the chart, and I've highlighted this many times in the past with some key reactions there. So that would be the minimum downside target, and that's still, I'm coming forward a little bit, sloping forward because if we don't drop straight down. That would put us there, according to this, in 3 trading sessions, yeah, just assuming things got pretty ugly. And that's about a 4.17% drop to that level. From there, a reaction. But again, we have some pretty sharp divergences. I do expect a reaction on the initial tag of that 136 slash uptrend line support level. And we'll just have to assess things from there. But either way, it still looks like more downside to come. Okay, SPY, what I've focused on quite a bit lately. Of course, we have the primary uptrend line in orange. I've zoomed in a little bit. It goes to the left of the chart there. But we have this minor uptrend line, which has a lot of reactions. So I give it a good deal of validity. However, the primary trend line comes in just under it. We're testing that once again. I think in one of the recent updates, I probably highlighted the fact that we were here. We found support on that trend line. You can see just how many reactions that we've had so far. And now we're testing it with a big red impulsive candle. Now that we had a big red impulsive candle down to it before, but support levels are like anything else. You tap on it, hammer, hammer, knock, knock, knock. Sooner or later, that's likely to break. Downtrend lines don't last forever, neither do uptrend lines. So a break below there, you can see the support levels below. We have the primary uptrend line off the early 2016 lows. Oh, and I should clarify, I want to refer to this as a potential uptrend line, because my definition of a trend line is any 2 points can be connected at random. We need a third point for reaction. However, just below that, we also have this key 240.32 support level. As I covered before, it was resistance here, it was resistance here, and then finally we broke out, back tested it successfully. So that was really a breakout to new highs there, and it was confirmed with a back test and a move higher. So if we come back in again, that would be a second back test. Usually, if you healthy price action and a breakout in a stock or the market is you break out, you come in and you back test once, and then off to the races. So to see another back test of the SPY, it calls that breakout into question. But either way, support is support until and unless broken. So look for a reaction somewhere around 240.32 and a break, especially an impulsive break. If we smashed right through there, or maybe just a bounce for a few days or short period of time, that would bring us down to my minimum target of 232.50 on the SPY, and potentially all the way down this 219.63-ish area. Again, it would probably look something along these lines if we get that, if things get that ugly. You can see the volume at price histogram bars here. I have them muted down somewhat, also on the daily. But if we look at that, you can see how that 232.50 is also, I put the line there because it's price support, but you can see a lot of trades have occurred, and then there's a thin zone just below it. So that helps, to confirm my suspicions, or, well, they'll be confirmed if it happens, but a break below 232.50, an impulsive break, you have a thin zone to fill. There is some support right there. You can see the support on the volume price histograms and some price support here. So maybe a reaction along the way, halfway down, bounce back up, maybe back test it, and then move down there. Again, I don't want to get ahead of myself. Right now, we're watching, let's see if we continue to see some downside, which by all accounts, everything in the charts look that we will. And 230, 240, 32-ish, let's watch that area. And again, with daily charts, what's most important is how you close. A little intraday break, a penny or two below, or a close a penny or two below isn't that big a deal, but a solid close below 240.30. And again, don't forget the leader here, even though there's fewer stocks in there, these are the top weighted, components of the QQQ or the FANG stocks. And they're also, top weighted components of SPY as well. So, or the S&P 500. So I already went over the levels I'm watching there, and we have, a little ways more down to go to get to that 136 level. But just as the SPY tends to rise more in a strong market, I'm sorry, getting that backwards. Just as QQQ tends to outperform and rise more than SPY in a strong trend, it's likely to do the same on the downside. In other words, to outperform to the downside, move down more. So that would give us again a drop, whatever I said there, about 4.5, maybe 5%. Whereas on the SPY, I'm looking for clean board here, so don't grab the lines. A drop of about only 2% or so, if that. All right, next chart up. Here's IWM. This is a daily chart. This has all my annotations and lines, and most important, pointing out the divergent highs, strong negative divergences in place, just like we had here back in this big correction preceding that big drop. And we've only just recently broken down. I'm going to highlight here this orange uptrend line. We do have quite a few reactions, at least four or so, and a very clear breakdown, at least in my opinion. Key level of support coming up here at 133.45. You can see a lot of reactions. And if you take a look just visually this way, you can see just as what's defined the sideways trading range all the way back to really about back to the elections. We had that Trump pump. Prices, a huge rip up, and then prices have just slogged around mostly sideways since then. And that 133.45-ish level has defined the bottom of that range. So that is a critical support level for the small caps. And if it breaks, then we're probably headed down to this first target here. You can see S1 being support 1, S2 support 2, T1 first target. And I've had this listed here for quite a while now. So, I think that we go there in time. 125.66, and I put the odds pretty good at a reaction there. So if you're a swing trader and you're short the small caps, and you could cover a game of bounce there, or you can, this market is just the sentiment extremes, low short interest, valuations, everything else, this extreme low volatility, price compression, everything that we've had. These are the things that make up those quick swoons down, like the flash crash in 2010, things like that. So you can't rule that out. And if one option instead of trying to cover in game of bounce is just set lower your stops, maybe back to this support level here or something if you think there's going to be more downside. I can tell you this, that if and when we get there, it's going to look ugly. Um, I can tell you statistically, I think the odds favor a bounce there, but again, there's always those possibilities that we go down. So to define your time horizon, swing trader, you want to cover, get out. This market showed so far that the dips get bought up, and there are corrections along the way. We haven't had a significant correction now since just leading up before the elections. But again, that doesn't mean the corrections are over, that technical analysis has stopped working by any means. It just means that we're due a nice drop. All right, and then mid caps. This is the keep it simple chart right here. Shows you that uptrend line that I just had on there without all the other junk. And then look again at this volume at price histogram. Why I have it still tuned up here so you can see it well. You see the volume at price histogram, and it defines this whole trading range since the Trump pump, and then it is very thin below that. That's what I'm looking at. You have a thin zone, and the thin zone on the volume of price histogram is comparable to what you see in a gap. When you have a gap, you don't have any volume of price histogram bars if there's not any price history there on the chart. Now that's similar. That's a thin zone because prices just ripped right through there. It means very few buyers. There was not a lot of volume, not a lot of transactions that occurred. So effectively, these thin zones work like a gap. Once entered, it's very thin. It's a vacuum, if you will. So once entered from above, odds favor that thin zone, just like a gap, is backfilled. So that would be a potential price target. And just to kind of quantify it for you, let me give you the line at the bottom of the thin zone. We're down here. The numerical value or price value is we'll call it 124.80. And in percentage terms, from where we're at now, if we got down there, you're looking at about close to we'll call it an 8.5% drop. in the small caps if we get there. Mid caps are telling you similar story. Somewhere I had the simple, there it is, the simple trend line. There it is, the uptrend line. This is a key support level. There's that same, all the volume at price histogram bars which show you this is a pretty key support level down here. And if you zoom in really on the small and mid caps, we had this flagging type action recently. So, and that's indicative of a continuation pattern. So we had the move down, an impulsive move down, call it the flagpole. Then this move up in consolidation, that's a bear flag, bear pennant, however you want to draw it. And if we break down, that's probably going to bring us down to this level where we might get a reaction. And the bottom of that thin zone, you can see the big gap right here. Uh, Sorry guys, wrong line. Let's try it here. There we go. So somewhere around that area, that's the thin zone to be filled on the mid caps. Okay, now let's talk about the VIX. The VIX, like I said, will go hand in hand for the most part with the stock market. You see these rallies, these spikes, all these rallies that I've identified in the VIX in the past. Most, if not all, were preceded by divergent lows. And although I don't have the text written here, you can clearly see we have a divergent low. In fact, we've been diverging. So as the VIX has been moving lower to record extreme lows, it's showing you volatility has been at extreme lows. Uh, we see the PPO, the RSI, everything else making higher lows or positive divergence. And so we had a divergent low here. You can see the arrows marked it, and we had a rally. We had another divergent low here, and we had that big rally last week. Now, where I want to get to, there's a couple things that I studied the chart and made some notes in the trading room the other day. This was in reply to member Shambo. Shambo had been scaling in long into some I think VXX calls, and I mentioned I was doing into VIX options, options on the VIX futures, that is. And let's see. So a couple things to point out. I listed my price targets on the VIX and have that at, let me change this color on this highlighting tool. The target is around 2280, and I'll show you that there. And also mentioned here, that I was hoping and expecting something along the lines of how the VIX traded back in June of last year with a big pop like we had last week. So that would be the week before, followed by a 61.8% retracement. That's a key Fibonacci level in just 2 days. And I'm going to show you this on the chart, followed by another thrust higher. Or, the last two pops this year that we had some pops that were faded, meaning prices just went down and back to where we started. And the VIX stayed low for a while, whereas the one before in March saw 2 to 3 day fade of nearly the entire pop, followed by another thrust to new highs. So let's just look at that now. Make sense of this chart here. So we can see that in some of these pops in the VIX, we had a pop here, we had a partial retracement. You can see we had a thrust up, partial retracement, and another thrust higher to about equal highs. Here's another one where we had an initial thrust up from a period of extreme low. This was the low end of the range back then. We made a new going back to the historical lows on the VIX. But so sometimes you get those initial, I call it a shot across the bow in the markets or in the VIX, and then followed by another, a partial retracement, usually about 50, 61.8, anywhere in those key fib levels, halfway down or so, and then a thrust to higher highs, and that would have meant the market took another leg down more than likely below the lows. And sometimes, like back here, we had a pop, and it was a one-off event. We faded nearly the entire pop. Although, eventually we worked our way higher. You notice the pattern. So when you see these spikes, this one was faded. This one you had a second shot here. You had a second shot here. This one was really an extension of the VIX moving higher, and then finally volatility collapsed there. Fast forward to where we're at now, we've had a couple pops. As I just mentioned, some of these were faded. Like you can see, these two were faded right away. And so to just clean up, I cleaned up all the lines on the chart just to show you this is the one that I was looking at, something along these lines, like the pop that we had in June of last year with another thrust up. And that would, you can see we had this initial thrust up here, a couple weeks ago, faded, and now we're moving up impulsively. You see, every other time that the rally was faded, once the rally was faded, we just kept going lower. The VIX just melted down with hardly any kickbacks. So far today, if you take a look at today's price action, we have a big green candle. The VIX is up about 25%. So this is indicative, plus everything I've just highlighted on the charts, that that this was an initial thrust across or shot across the bow, the relief rally, and then boom, we're going to go up here. And again, that's the area I'm targeting around the 2280 level. There's another target here, potential target around 2016, but I think there's a good shot we'll blow through that and get on up there to 2380, and that would be, well, from where we're at right now, still another 56 or so, 55% in the VIX. Now, is it objective to go long? It would have been yesterday, going back here. Let's see where we were traced. Let me pull up a clean board of the VIX just out of curiosity because I haven't done this. So far off the lows to the highs there. We retraced a little bit better than the 61.8 fib level, maybe the 76. If I put up the other additional fibs, there's a fib level that comes in around 76. That's probably where we retraced. And you can also see some support back here along this area here. So either way, that's what I'm on lookout for. Let's see what happens, but I do think there's more upside in the VIX. Again, you could have scaled back in here on the pullback to support. I don't really I don't trade the VIX very often, in fact, very infrequently. And I'll put up analysis when people ask those VIX ETFs. I mean, your timing has to be precise. Um, Unlike swing trading, you can get in early on a swing trade, whether it's long or short, and as long as you're not stopped out, if you wait, that trade can pan out, even if it takes months to do so. However, on the VIX, or if you're using options, you not only have to get the directional call right, you have to have the timing right. Because with options, as you know, they expire, and on those VIX ETF, the tracking ETNs, the decay is awful. Sitting in those, over time because they're trying to roll futures contracts and all that. So they end up, if you look at a chart of the VIX and compare it to like VXX or something, a long-term chart, you'll see it's not so hot. There's VXX. You can see just falling down, plummeting. You would have lost almost all your money, even just in the last few months as the VIX gone almost nowhere. Now, this does look like we can see here the divergent low. You can chart this thing, and we certainly have broken out. We've made an impulsive breakout, and I think it may go up to that 1870 level or so. I think I probably posted this the other day. I don't know from where we're at now. That would be still about a 40% rally. All right, let's wrap it up there. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.